Warren Edward Buffett, an American investor, philanthropist, and business magnate, was born on August 30, 1930 in Omaha, Nebraska. He is the CEO and chairman of Berkshire Hathaway. He found interest in business and making investments while growing up as a youth. As a result, he decided to attend business school after graduating at 19 from the University of Nebraska. From there, he was groomed more on business and investment, and he also built his investment strategy around Benjamin Graham's concept of value investing. He then studied finance at the Institute of Finance in New York before forming several business partnerships. Warren Buffett is among the most successful business people and investors of the modern era, and Forbes ranks him as the fifth wealthiest individual in the world as of the mid-year in 2022. He has a current net worth of more than $118 billion. Warren Buffett's investment in the bear market was a significant reason for his success as an investor. He had an investment philosophy that helped him become more wealthy in the long run. I'm going to go over all of that with you now. He primarily purchases stocks to hold them for an extended period. This strategy has enabled him to amass so much wealth that it does not affect his investments, even if a recession occurs in the bear market. Coca-Cola, Wells Fargo, Moody's, and American Express are among the companies he has stock. He has held shares with them for many years and has made a substantial profit each year. Warren understands that these companies' earnings typically increase over time, so he purchases them and holds them for an extended time until the profit begins to flow in excess. Another contribution to Warren Buffett's fortune during the bear market was that he regularly invested without regard for when or when not to invest. He periodically buys shares from prospective companies at a fair price, regardless of market conditions. These have aided him in sustaining and growing his wealth irrespective of how high, volatile, or low the stock market was during his investment. He believes that it is pointless for someone to invest in a business at a specific time. During the October 2008 stock market crash, Warren Buffett expressed an interest in purchasing American stocks. Many people were surprised by his desire to buy these stocks because they were concerned about the market's downward trend. Warren kept his word and purchased $5 billion in Goldman Sachs NYSE GS stock, which included a warrant to acquire additional shares in the future. He eventually received a 10% interest rate on his investment, which allowed him to add more wealth to his fortunes. However, he did not stop there and purchased $3 billion in shares from General Electric NYSE G and billions from Swiss Re and Dow Chemical NYSE Dow. His investment with these companies, on the other hand, was a spotlight for them because it helped them get through the difficult stage they were in during the crisis. Warren Buffett eventually gained additional billions due to his risky investments, resulting in a massive increase in his net worth. The Warren story is an excellent example of how to become a multimillionaire during a bear market. He knew how volatile the market was because of his previous experience and knowledge. Someone who does not have a thorough understanding of the stock market, finance, and investment is advised not to participate to avoid losing their money. It is no longer news that the stock market has begun to decline, and this is an excellent opportunity for people to invest in the bear market. The bear market does not last too long, so it is vital to invest quickly in buying down assets rather than waiting for a bottom line before investing in the dip. Although the bear market is mainly considered the worst time to invest, there are numerous ways to profit during this period. Before I explain how to make more money in a bear market, let me give you some background on what a bear market is, the S&P 500, and how acquiring assets, bonds, and stocks during a bear market can boomerang your net worth. Finally, I will tell you how a bear market can help you become a multimillionaire. What's a bear market? A bear market is generally a financial market downtrend. It most commonly occurs when there is a 20% or more significant fall in market price, and it usually lasts for a short period, which can be 2 or more months, 2 years, or even 4 years during critical conditions. For better clarity, I'll use an example to emphasize how we can describe the bear market. Assuming a company has a meager earnings rate and its stock price falls by 25% or more, we can say that the stock price has fallen or plunged into a bear market state. A stock market correction occurs when a stock falls by 10% or more, but when the stock falls by 20% or more, we can now say that the market correction has progressed to a bear market. A variety of factors contribute to the bear market. It can result from a global pandemic, an unstable economy, increased interest rates, and oil price inflation. The bear market allows investors to buy assets, stocks, and bonds at a low price during a market downturn and then withdraw their profits when it rises dramatically. A bear market can indicate the possibility of a recession, but this is a rare occurrence. On the other hand, a recession occurs when an economy experiences a long-term temporary decline. It could happen for 7 months or even longer, depending on how severe the crisis is. During this time, the country's economy, businesses, and GDP all suffer a total breakdown. The S&P 500. The S&P 500 is an index in the stock market that stands for Standard & Poor, and it represents the names of the financial firms that created it. The S&P 500 uses its index to track the market capitalization of companies. You may be wondering what market capitalization is. Market cap is issued by a company and indicates the total value of all stock shares. With the current saga, the market is experiencing a downtrend in all cryptocurrencies, stocks, assets, and bonds. The S&P 500 has been in a similar situation and is on the verge of entering a bear market. It's been hovering around for some time, and as of January 3, it went a 16% decline from its previous high. People believe that the price drop results from the Russian invasion of Ukraine, which has resulted in numerous sanctions from various countries and an increase in interest rates due to a fear that all of this could result in a bear market. Many believe that these scenarios will push the S&P 500 into a bear market. However, even if this happens, it should be an opportunity for young people to quickly invest their money in acquiring assets and bonds from the market. Anyone who understands the market should know that if they put their money in the S&P 500 dip, they will be rich as soon as the market stocks retain their previous peak value, and if they leave it for a long time, it will fetch them more money and make them multimillionaires. Before we dwell on the possibilities of becoming a millionaire during a bear market, locate and click the like button. Thank you. How acquiring assets, bonds, and stocks during a bear market can boomerang your net worth. With the current market downtrend, cryptos, S&P 500 stocks, bonds, and assets are experiencing a decline, and the best way to benefit from these falls is not to panic, but to invest in them. If you want to increase your net worth, purchasing shares from assets and stocks is the best option. All assets, stocks, bonds, and cryptos have dropped in price, and taking advantage of this opportunity to buy them at a low price would undoubtedly pay off. Buying an asset during a bear market is highly recommended. However, we have good and bad stocks, and both decline during a bear market. It is now up to those who have done extensive research on which stocks are good and which ones are bad to directly invest in the good ones and wait for the stock to recover from the crisis and return to the growth track. The bear market almost always occurs during difficult economic times. Consider some of these cases before investing in some companies during a bear market. A bond rating is generally a grade given to a company's bond to demonstrate its credit quality, or rather a way to show a company's creditworthiness. Bond ratings are AAA, A, and A, and they are considered investment grades. A bond rating of B and C or worse indicates low or very poor creditworthiness. Knowing all of this, you can see that the economy is terrible and that stocks have all entered a bear market. If you see a company with a bond rating of AAA, don't hesitate or wait. It's almost certainly a good buy, and you're on your way to increasing your net worth once the stock recovers from the crisis. How you can become a multimillionaire from a bear market. I believe you have been truly enlightened by everything I have said. So right now, I'll be discussing ways or steps you can take to become a multimillionaire during a bear market. One of which is investing regularly in industries you're very familiar with. Investments in stocks and assets are far beyond the capabilities of someone unaware of the field. It's a good investment once you know a specific industry and are very familiar with the ins and outs of the company's system. Regardless of how volatile a market appears to be, it is essential to invest more regularly if you want to become a multimillionaire. In these cases, I will use Warren Buffett as an example. Warren Buffett became a multimillionaire investor by focusing his investments on sectors and industries in which he had a deeper understanding of their systems. He did, however, succeed in businesses about which he knew little, with the majority of his success coming from industries within his traditional field of expertise. Investing in stocks to hold on to them for a long time. Investing in stocks and assets over a long period is another important factor in becoming a multimillionaire. Being very successful in life is not a one-day journey, and in some cases, it takes a long time to reach a milestone. People nowadays are short on patience. Many people want to invest in a bear market and then cash out their profits when the stock returns to its peak. But the best option that has made many people multimillionaires is their willingness to be very patient and wait for their investment to grow over a more extended time. Acquiring a call option. A bet that one can make on an asset, which could be an ETF or a stock bet in the short term, would experience a rise in its value is called a call option. Call options have a limited shelf life and can expire at any time, causing you to lose all of your money if you are not vigilant. However, if you know of a good company whose stock has fallen, you can buy a call option at a low price during a bear market and profit handsomely when the market recovers and prices rise dramatically. Thank you for sparing these few minutes learning from our channel, and we hope we've made you better. To learn more, skim through our recommended video section.